Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day video, market video for today, which is Tuesday, but also for the end of the month. So thank you for joining me. If you're joining in on live stream on X, I will go through as many charts as I think of interest, but clearly you can see from my screen what kind of a day it was to end the month. So I'll try to add a little bit of perspective in this. And of course, even though I'll kind of give you what I'm thinking in terms of what happened today, but also we'll go through the technicals. And really, that's the most important thing, I think, for a trader is to, have levels to say, okay, I'm going to try a trade here, and here's where I know it doesn't or won't work. Having a stop price, having a risk management system firmly in place, because this was a tricky month. I thought for April, depending on how aggressive you were on the short side, maybe you did fairly well, but from the long side, I thought that this was a difficult month, especially how we ended the month. What was interesting is how much the commodity trade really sold off today. Now, partly, it could be some of these moves are related to kind of towards month end. Seems to be. It's always a bit tricky. I always think that the last day of the trading month to trade, I always find that very difficult. I think it's one of the most difficult days to trade. I also report my P&L at the end of every month. I'm one of the few people who do that. But that to me just adds pressure on what I'm doing, because I know that I have to report P&L, and I always want to show, good numbers. For this month, I did not do a great job. I ended up down, not up, down 4%. So I gave back some gains. Not the end of the world. I tried to be a little bit more defensive, but I got caught on a couple days. There was one day where there's a lot of selling pressure. I'm trying to. I think that was the Kashkari day, right? When he came out, I lost a couple percent that day, and today was not a very good day for me either, because I was long more commodities, and those got really hit pretty decently today. So regardless, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that I'm going to be referring to is for education purposes only. So a couple things that were pretty negative today. The bond move, of course, a lot of, basically risk off, right? And yes, there was an economic report out this morning that showed inflation is ticking higher, employer cost index. And then we also got consumer confidence, which was worse than expected. Normally we've seen the bad news, it becomes the good news. But that's only in the case where it has inflation implications, right? So for example, a worse than expected jobs report, right? That means the economy is cooling a little bit, and that might dampen inflation a little bit, right? So that's really where the bad news is good news in terms of economic reports. If it has implications in terms of inflation, right, then yes, absolutely, then it's a good thing. But consumer confidence is more or less what the consumer is feeling, and they know that we're dealing with high inflation, and inflation has ticked back up. So I don't know if that's really the bad news. I think the bad news is the bad news with the consumer confidence report this morning. Regardless, I think that that the market was kind of setting up for, we were right at this bottom of value for the month of price getting right up into resistance, overhead supply central, and you really need to have a lot of buyers kind of really take command and push through that overhead resistance. So very textbook. And I was on a broadcast at the end of the day, and we were talking, there's various different things to kind of tell you that overhead supply was coming here. For me, it's the value areas, which volume at price is very instrumental in what I do, and having those concrete levels, which was 51.57 in S&P futures. I mean, we got basically right there and got rejected. So That was a very easy level to watch. And if you're reading like my Substack, I've been quoting that level, watch that overhead supply. And then I take it another step and look at the 1 hour value area so that we've got some multiple time frame analysis. And to flash back to last week, right? Just really quickly, I'll do this in 10 seconds, but here was the bullish 80% rule triggered, right? And we talked about this all last week, and the 1 hour value area gave a really good signal to take profits there. And then, it kind of set up for another trade, after some poor earnings from Meta, so on and so forth. We came back and we tested that bottom of value and found support, and we rallied from that point. Flash forward, move forward to where we are presently, and yesterday we were just kind of hanging here at the top of value. We mentioned that you have to be careful here because we broke into the value area, and that triggered the bearish 80% rule. If you're not familiar with those rules, I'm not going to go into them. You could just Google value areas and 80% rule. Basically, what it means is once you start either above or below, when you start below the value area like you did last week, and you break through, that's the bullish 80% rule, right? Meaning that there's an 80% chance to go from one side of the value area to the other. This is the bearish 80% rule. We started above value, broke in, and we came all the way down to the bottom of value. So I mentioned levels, right? So this level right here, 50.56, right? In the short term, because we're looking at the 1 hour chart, going to want to see price hold here, right? And potentially bounce here. And even if it goes lower a little bit, right? Basically get back in here. So there's two things that could happen here, because tomorrow is a Fed day, and either price is going to continue to sell off overnight. And if that happens, right, and then we come back and we bounce tomorrow, if we do not break back into this value area, that will be a retest. And then you could possibly look for a short here if we retest and we fail at this 50.56 level, and then we start drifting lower, that could be your short setup. Now scenario number two is if we hold here in the overnight market and we begin to kind of bounce from there like we did textbook, like we did last week, right, at the bottom of value area. And again, all this is automatic. Like there's no, we don't have to interfere at all with these levels. I'm not drawing these levels. They're all automatic using the MarketWebs, right? There's no anchoring. I know like some people like anchored VWAPs. I don't have to try to anchor something to where like, that when you're doing things like that, you're using your judgment. In terms of like setting where you're going to anchor things. We don't want to touch any of that. We don't want to be involved in finding out what the high was and anchoring. We want all these levels drawn automatically for us so that we can begin to kind of interpret. Because when you're anchoring things, you could say, okay, if it's not this anchor, if it's not this low, then it's this low. And if it's not that low, then it's this low, right? That you're going to anchor from. That's not a great system, in my opinion, to have. If it works for you, congratulations, continue to use it, because there's multiple ways that you can use different indicators. But really, so if we bounce, so scenario one that would help for the long side is if we hold here and do what we did last week. The other thing is if we do continue to sell overnight and we push back to the bottom of the value area and we break in, right, then that would be positive. Okay, but this is just very short term. But if you want something to kind of say, okay, if this happens, then I'm going to do this, right? And that could set up for a long for tomorrow, okay, if we hold and start to break back higher. Now, let's go back to this just for a second, right? So the daily chart. The main thing to know here is what's important is that, because I think the daily chart is more important than the 1 hour chart, right? It covers more, bigger time frame, but if, the 1 hour will reveal itself in terms of clues, but also this 50-day moving average, right? Just keep it simple, right? And just from a very easy risk standpoint, right? We want to see things above their 50-day moving average, right? We don't want to see things break back below. You're losing the uptrend. So, this could play out in a number of ways. Like I said, we can hold here and kind of try to build back here a little bit, right? And put in a little bit of a higher low. But if not, there could be, notice that, this value area is now not going to take precedent. We're going to have a new value area here for the month of May. And that level is going to be right around 50.94, right? So you're going to hear me talk about that quite a bit. And, and we're going to need to get back above that, right? And if we can't, right? Then I think, so the key is here, like, from my trading, is if we can't get back inside that May value area and we're also below the 50-day moving average, then it's very light risk, right? Until that changes. And of course, you could do more things like day trading. You could do more shorting as well when we're below the 50-day moving average. But ultimately, it's a very easy decision, or it should be an easy decision if you've been doing this for a while. It's just to reduce your risk, right? And that's the major index. Of course, we're going to look at, what individually things look like too. But ultimately, that's the decision that, like in my trading, that has to be done. This excuse me, this bearish 80% rule is not complete. Sorry for the sun. I'm in lower Manhattan, and it's a pretty nice day out, so I can't wait to get outside once we stop looking at this the market. To talk about a couple individual names, I was on, like I said, I was on a broadcast earlier. I didn't play any of these names for earnings, Amazon, because I just thought we kind of saw what happened earlier or in the earnings season with Netflix as well as Meta. Just names are up too much, and I think it's not a bad sign here that Amazon is holding its own. Certainly, we took out this VPOC on the initial reaction, but I would watch this 180 level for this week, right, and see what Amazon can do. I think the earnings call may have already started, right? So that's one name. SMCI got a lot of attention. My thought, and again, I was on a broadcast. You could find it on YouTube. It's the closing print with Joel, um, and Joel from Benzinga. And my thought is just that the stock has just gone up too much, right? I mean, you have to have reasonable expectations because the stock was at 300. Just going back to the beginning of this year, let me say that again. The stock was at 300. The stock went up to went up to 1288. That's pure momentum. Now, there's some fundamentals behind there too. This company has, continued to increase sales and up their guidance and so on and so forth. But even if you're if you're upping your guidance, right, you still have to look to see what the price has done. So that would be one thing. So let me say this in another way, right? Let's move this over here, right? And let's say that the company reported today, which it did obviously, and the stock was trading at 350, right? What do you think the stock would do if it was trading at $350, right? It's a whole different scenario, right? It's a much lower price and the expectations are not as high. When you're dealing with this, right, the stock has advanced a ridiculous amount, right? And that's good if you're trading, right? And you made money in the stock. That's awesome. That's what you should be doing. But you also have to have in the back of your mind that a stock going from 300 to 900 is not reasonable to think that, oh, just because they're going to report earnings and they beat earnings, that the stock is going to go up. It doesn't work that way. You have to look at what's happened in the stock price. You can't just take the news. And I go over this with traders all the time. It's one of the I think one of the biggest misunderstandings that newer traders have is that they think just because the stock beats their numbers that they're going to go higher. Right? It all depends on where the stock has been and what it's done since the last quarter, right? In addition to what the numbers are, all right? And the other thing that I've talked about too, one of the other mistakes that newer traders make is they fall in love with stocks. You can't do that, right? Now you could have high conviction in a name, right, because of several different reasons and so forth, but you cannot fall in love with a company. You have to you have to have more risk management sense than that if you're trading. So again, I'm not trying to be negative about this name. I don't have a position in it. I didn't want to short it, you know, just because I think it's a hard trade with the implied move. Let's go on. There's a couple of names that did actually do pretty well after earnings. TMDX after hours is up nicely. So, this is what we want to pay attention to, names that really had good quarters and that had a good earnings reaction, right? Because we're seeing a lot of these names that have good initial reactions and we're seeing them fall down, right? I got a lot of questions about Eaton, right? I'm long Eaton in my TTG trend portfolio, right? That's a portfolio of names that acts like an ETF. I've got almost 50 names in that portfolio. So Eaton had pretty good numbers. I saw somebody tell me that something in their numbers wasn't that good, but it's the issue is that these stocks are priced to somewhat perfection, right? Look at what Eaton has done over the last, quarter, right? This is the stock when the stock was at 211, stock's at 320. That's a lot for an industrial company. So again, you have to kind of use Larry David reference, curb your enthusiasm on some of these stocks that have advanced this much. And if you still have a position in them, that's okay. I mean, I try to reduce, into strength, but if you still have a position in them, watch that 50-day moving average. This stock has not broken its 50-day moving average. So that's what we have here. I mentioned I would cover a few other things too, which I think are also kind of just indicating some issues. Now, this Bitcoin thing, I'm not an expert on halving, but I do know that, the buy the rumor, sell the news on an event. And I think that that's what you have here with Bitcoin is that it was a sell the news event. Now, this is breaking down. This was down all morning. So, this is also kind of, to me, Bitcoin is a risk on, risk off type instrument, right? And that has been breaking down too. So, um, overall, I'm not going to talk too much more. I want to keep the video somewhat short because I have to do a video for members. But you can see there's some names that did actually do pretty well today after hours. Look at Root is up. Root is up 25%. Powell, not Jay Powell, but Powell, the industrial company, is up 18%. Pins actually did pretty well too. So you've got a lot of names that are up over 2% in the after hours. So I would stay nimble. I wouldn't get too down on this market. I would, watch those levels and kind of go from there. And you know, ultimately, this AI theme, it can't, like in my opinion, it can't be the only theme that's going to carry the market. And also, it's one of those themes that I think that's going to come and go to some extent. So just because, SMCI and maybe Nvidia aren't going to be the number one or number two companies on the top of your watch list, I think that there will continue to be some other opportunities as as we continue to go through earning season. So yes, some bad price action today, not great in terms of what we're seeing in terms of failing at overhead supply, but give it some time, be patient, right? This could straighten itself out, and it may not be one day, maybe a couple days, but ultimately, I don't think it's as bad as it seemed today, right? Here's what we have in terms of sectors. This is kind of a washout, right? You're going to have all these things below their 5, 20, 50-day moving average. We'll just have to kind of let them build up, and we'll see. Now that most things are down below their 5, 20, 50-day moving average, we'll let them kind of, we'll see which ones want to kind of rise back up. But be patient. We've got a whole new month. And it doesn't matter this month, kind of analyze this month, review it, because that's an important step in the trading process, but then be super focused for the month of May, right? As Bill Belichick used to say, they try to win one game at a time, right? Try to win 1 month at a time. Focus on try to improve on what you did in April, and tackle the month in front of you, and not worry about what happened in April. And same thing if you had a good month in April. All right, guys, have a great night. See you tomorrow.